Tom, it's such a pleasure to have you here because this is perhaps the most surprising top holding I could have imagined for a fund like yours. Why Tesla and when?
Well, thank you very much for having me on the show. We bought Tesla in 2013. That's sort of common for our strategy. Our average holding period is more than 10 years.
Wow.
And it's the combination of addressing a very large opportunity, seeming to have a really impressive competitive edge and driven leadership with significant skin in the game going after that opportunity.
So now you're in a sort of awkward position because the stock has arguably done too well. Now you've been forced to pair it, but would you want to anyway, given these prices?
No, we're driven by the diversification rules. It is a sensible idea to have adequate diversification in the portfolio. But I think Tesla addresses just such a large opportunity, and it's really just getting started in addressing that. So it is a reaction to those rules rather than an investment decision per se. And
I imagine you guys do investment analysis the same way that it's always been done, which is to try to figure out what are these earnings going to look like. I mean, in other words, are you doing this bottoms up or is it top down? Because a lot of the bulls on Tesla, this is the last question on Tesla, I promise I'll ask you, but a lot of the bulls on Tesla say, listen, the battery opportunity and the energy systems, and it's very macro, it's very top level driven. Is your story top level, big story driven, or can you look at this and say the earnings power and the multiple on that is going to justify holding the stock at these levels?
Yeah, I mean, for us, it's about the long-term earnings power of the business. So much of the market is focused on what the company's going to earn in the next quarter, the next 2 quarters, but so little of the value lies in that time period. So it's about thinking through the scale of the opportunity, whether that's in automotive or deploying that capability into the energy markets. But it's also thinking through what it means to be a software business in the traditional automotive industry, because it's become really apparent over the past 7 years that the traditional auto companies are struggling to match what Tesla is able to do.
Interesting. And we know that's true. We also know there's a raft of new entrants coming that hope to capitalize on the same economic